Welcome back to ARCHIP News, where we share the latest crypto news with you. Let's get stuck in. Equity markets continue to trend higher, setting fresh all-time highs in September, which is usually a seasonally weak month for equities. Bitcoin, by contrast, set its latest all-time high in July and has been consolidating ever since. In early September, it found support near 108,000 US dollars. Currently, BTC continues to trade above its bull market support band, the 20-week EMA, and remains comfortably above the short-term holder cost basis at 110,000 US dollars. What many market commentators say is that gold is currently stealing Bitcoin's show. If loosely looked at the performance of gold and Bitcoin over the past 12 months, we can see that whenever gold reached a temporary local price top, Bitcoin would then take over the baton and rally shortly thereafter. And vice versa, when Bitcoin took a breather, gold rose again. Of course, this inverse relationship is not set in stone, but it might serve as a reminder that investors will have to wait for gold to find another local top before we can expect another Bitcoin impulse. On the Bitcoin-gold relation, it is worth noting that while Bitcoin has recently already reached a new all-time high when measured against different US stock markets, the cryptocurrency has not yet surpassed its all-time high from 2021 when measured against gold. Should BTC break out sometime in the future, a strong movement could be likely. Now, looking at the current demand side for Bitcoin, spot Bitcoin ETFs have seen inflows of more than 3.1 billion US dollars so far in September versus a little over 400 million US dollars in outflows. Notably, these inflows have pushed institutional ETF demand back above the average daily supply of newly mined BTC. If sustained, that would be a constructive signal given that historically Bitcoin's price has tended to trend higher whenever ETF demand exceeds new Bitcoin issuance. All in all, while September and October are likely to stay volatile, the prospect of an imminent US rate cut and subdued bond market volatility, as indicated by the MOVE index, create a supportive liquidity backdrop for risk assets heading into Q4. Within crypto, the setup remains favorable for altcoins. Ether and Solana are currently fighting over who might be the dominant crypto asset to push the wider altcoin market higher if we should get a sustained rally. Sol has drawn fresh focus following a series of treasury company announcements. According to strategic solanareserve.org, 17 such players collectively hold roughly 17 million SOL. The largest of them is Forward Industries, that is led by crypto industry titans Galaxy Digital, Jump Crypto, and Multicoin Capital, all of which have been very supportive of the Solana thesis in the past. The company is reportedly holding 6.8 million Solana, which they just recently bought at an average price of 232 US dollars. The name of the game among the rest of crypto investors is figuring out how much additional buying power these treasury vehicles may still deploy. Just within the last few days, another one called Helios has been formed, aiming to raise up to 1.25 billion US dollars in potential gross proceeds from the PIPE offering that they do that could find its way into SOL if successfully raised. And beyond Solana, speculation is already rife with which coin could be next in the treasury asset race. So while it's true that treasury company demand currently is probably the most important demand driver for bigger altcoins, investors have to closely monitor this field for any cracks in this demand picture. That's it for today. Please share your thoughts on where you think Bitcoin is headed and what you think about digital asset treasury companies. Let us know in the comments. Until next time, And don't forget to like, subscribe, and follow ARCHIP for more weekly insights into the future of crypto.